it doesn't matter what strategy that we're using, there's certain things that have to be in place if we ever want to think about consistency. So having spent the last few weeks working with a bunch of traders, great group of lads, it became very clear very quickly that there's certain things that, if not fixed, will just keep us looping, just keep us in that cycle of showing up every day, but the results aren't there. Maybe we can even actually predict where the market's going, predict we have the right market direction, but we're not extracting money from the markets. So I'm going to cover the requirements that are must-haves before we even think about consistency and the rest of the process. These are the, as I said, must-haves in place, because if any of these are missing, and I would go as far to say if we do not have even one of these in place, that it can be absolutely detrimental to our results. So start with the requirements. So before we think about strategy or the rest of the process here, these are the absolute must-haves. So if we're missing any of these, there actually really is no point in showing up every single day. So we want to nail absolutely all of these, and then we can think about adjusting strategy. Then we can think about optimizing our process. But numero uno, we got to get these in place. So, and they're all super basic, super simple, but they are so crucial. So first one, obvious one, we need clear rules. So not having, yes, I have a strategy, everyone has a strategy. Are you able to, the elevator pitch for instance, are you able to write your strategy in 1 to 2 sentences, 1 to 2 lines preferably, as in if you were in the elevator with someone and you had 30 seconds to go down and they said, okay, so I'm the trader, oh interesting, what strategy do you use? How do you then explain that? Are you able to reel it off your tongue? So for me, I trade between daily support and resistance zones using the H4 structure for bias, and I enter on hourly confirmations. 3 lines there. Again, you could put that in 1 sentence, quickly, straight, simple. So we want to have that in place, of course, before we ever think about moving on. So it could be an exercise to actually write it down. You can fire it into ChatGPT, say, look, this is my strategy, so you explain it how you would explain it, and then you can copy and paste it into GPT and say, can you simplify this? Really useful tool. And again, we'll get into a bunch more ways we can actually use GPT for fundamentals, etc. But that's a story for another day. So then the next thing is then the if this then that statements, and actually you can use GPT for this. So if you have your clear rules, you write them in, you put them into ChatGPT, it gives you your simplified version, and then if you say, can you create me if this then that statements for when it comes to market execution. So basically, again, you don't need to use ChatGPT, you don't need to use an assistant, but what we want to do is have, if price comes down to this point, then I will do that. If price reaches the daily support resistance zone, we have a break-in structure, there's an imbalance there, and price pulls back to that area, I will trade. If price closes below that imbalance, my trade is invalidated. We want to have it as clear as day before price actually gets, before the thing happens, the event, before we get our entry signal. We want to have written down somewhere, whether it's on a journal, in your system, what you're going to do when that happens. And then once you get the engulfment, once you get your confirmation, once you get the break-in structure, it's no longer super tense. Excuse me, super tense. Should I do this? Should I enter? It's, you've literally written it down half an hour ago, what you're going to do when it happens. So then when the actual event unfolds, you're in a much calmer state. Your heart doesn't race as much, and it's super crystal clear what you have to do. So for instance, if you have fear as a current issue, if that's the current constraint on your trading, the if this then that statement will be golden for that, because there's no denying it then. And it's either going to be fear or greed that's the issue. Often starts off as greed, we trade too much, then we lose so much, then we develop trauma, and then we actually end up in the fearful state. So if you are in that fearful state, having a clear if this then that. So if price pulls back, I get my break-in structure, I will do this. So once that happens in lifetime, you feel like an idiot if you don't execute it, and it's genuinely it's genuinely like then you're just not even following your process. So absolute golden one is having the if this then that statements. I learned this from Mike Bellafury. Can't remember what their trading firm is called in New York, but he gets all the traders to fill out their if this then that statements, and I'm telling you, it's absolute winner. Next thing then is to actually hold trades. So if we're entering our trades and we're closing as price pulls back, I would even go as far to say I actually had a conversation with a trader today, and we were discussing uncertainty in trading. And if we're not holding our trades to fruition, we're not actually gathering data points, and we're not actually seeing if our strategy works or not. And I was guilty of this for years, literally years. I was calling the market day after day after day, sending in charts. People were taking the trades that I was calling, and I wasn't profiting because I was closing as price pulled back to my stop loss. I was pulling my stop loss down so I wouldn't lose as much. And it just meant that none of my data was actually accurate, and I wasn't even sure if what I was doing was working or not. In my head it was working because I was calling the market, but my actual set of clear-cut, no subjectivity rules I was never able to optimize and actually build on them because I was always adjusting my trade or adjusting my take profit, adjusting my stop loss. So when I started holding them, accepting the loss, like welcoming it, like okay, yeah, fucking hit it, bro. Then I was actually able to, okay, you know what? It's not that bad, first of all. Like, I followed my rules, so it is a win. But then I had data to work with. I was like, okay, I can see now what my win rate is. I can see what my best take profits are, etc. So if we're not holding trades to fruition, until you do that, you will never, ever, ever get consistent. So it's just it's a no question. You have to just hold the trade. If you enter it, you have to be responsible and say, okay, look, I entered this trade, so now I'm going to hold it. And a good process is that even if you enter and you entered early or you don't like the look of it after, you have to hold that loss, and then you'll then learn the lesson that, okay, maybe next time I will wait for confirmation. But unless you actually, like if you enter early before your confirmation, price pulls back, you lose 0.3%. You feel stupid, but it's not that big of a loss, and you don't even count it as if something's happened, as if you deviated from your rules because you closed it on a minor loss. So actually allowing the trade, even if you went against your rules, to fully go to fruition and fully take you out as a full stop loss, that will then teach you the lesson, like, bold boy. And again, for me, that's what I had to do. I had to just say with my chest, just firm it. Just say, okay, look, I entered this trade. If I ever want to be successful, I have to hold trades to fruition. So then just accepting the fact, and it was so quick that I stopped deviating from my plan. Literally, I'm talking a matter of 2 weeks. I stopped taking trades that were outside of my plan, and up to that point, I couldn't understand how someone didn't take trades outside their plan, because I would never actually let them hit my stop loss. So I was never actually getting the repercussions of my actions. So hold yourself accountable, hold your trade to fruition. It's an absolute must. Then next one, so recording data. Kind of touched on this already, but unless we have data to work with, we're literally just spraying from the hip and just taking a bunch of random trades that we think in our heads, and you'll probably listen to this thinking, I know that I'm actually recording my data in my head. I said the same thing. Unless you're recording your data 100% accurate, you will not be consistent. At least consistently. Of course you can win trades. Geez, you can fucking win a trade any day, but you will not be able to hold a trade with confidence and then be able to actually scale up on that particular setup as time goes on, unless you have the data to back it. So, as a saying, don't try and fix any question that can be answered with maths without maths. That's not I've butchered that, but basically, like, if you have a problem in your business, or you're thinking about, should I do solution A, solution B? If you can answer that question with data, then use the data. Same as in trading. Trading is a business. We have data is our best friend. but unless we're putting our data in 100% accurate, it's absolutely useless. And again, I was so guilty of this. I was just lying in my data. Like, I was only recording my data maybe 70% of the time. Even in that 70%, when I was recording it, I wasn't putting it in 100% accurate. I was making my stop loss smaller on my data than it actually was. I was leaving out trades that were against my plan, etc. Just manipulating the data. So, because I don't know, I imagined someone was going to look at it, or I wanted it for myself. I thought that I was going to give myself confidence that my data was better. Complete bollocks, absolute shite. Like, literally harming nobody but myself. And it's just the ego. It's the ego wanting to think that you're a better trader, which ends up actually making you a shit trader. And I say good trader and shit trader. You can be a good trader, or what you think is a good trader. What I thought in my head, I was a good trader for literally 5 years, because I was able to call the market after, let's say, a year, and my analysis was always accurate. But I didn't have any results, so therefore I was actually a bad trader. Like, the output was that of a useless trader. So, a little bit of a tangent, but yeah, have to record the data, every single trade, and 100% accurate, every metric, and reduce the metrics as much as possible to only the ones that you need. So, again, you can use the journal that I have, you can use a spreadsheet, whatever you want to use, but make sure that you're inputting all of the data. Then the review process. So actually having a systemized way, a particular time each week, whether it's after New York close on a Friday, if it's on a Sunday evening, getting ready for the next markets, for the next week, having that review process. So having that time where you go in and actually look at, okay, what happened this week? What did I do well? What went not so well? What am I going to do to improve next week? Then, section 2. So these are then extra stuff that we might not necessarily think of all the time, or we think are necessary, but without these, we're actually exposing ourselves to so much damage and psychological issues. So we want to have at least a consistent trading time. So it can be Asia, it can be London, it can be end of day, it can be London and New York, whatever it is. We want to have a consistent time when we're showing up with the charts. And I know that everyone has jobs that are different times, but picking a certain time that actually works around your job. So again, you can become an end of day trader. So you can just switch your time horizons to being a daily trader. Apply the same strategy that you currently have, but on a daily time frame. That way you can execute in the evening times, after work or before work in the mornings, etc. You can switch to a 4-hour strategy, so that you only have to be on the market, or you only have to look at the market once every 4 hours. So that means you can be at work, and then you can just set an alarm 15 minutes before, 10 minutes before, go in, assess the market. Is it giving you an entry? No. Boom, move on. You've got another 4 hours now. So it can be adjusted, but we do want to have a consistent time where we are entering. Otherwise, again, our data isn't going to be accurate, and it's just too much chaos. And the big thing with this is that, for me, a huge problem that I had with taking mediocre setups was because I knew that for my data, okay, at least once a week on each pair, I'm going to get my ideal setup. But I wasn't on the charts at a consistent time. So therefore, in my head, I thought that there's a chance that I can actually miss this time when I get my entry. So this entry, which is like 70%, 80% my setup, I'm going to take this because I might miss the other one. There's a chance I'll miss the other one. If you have the consistency with showing up and being there at the certain times, you know that you'll be there for when the setup happens, so then you can leave the mediocre shit at the door. Then, having an income outside of trading, or at least 8 months runway. So a huge problem again that I ran into was juggling this psychology of worrying about money and actually trading. So we all know that if we need the money to trade, we will never ever it's just setting ourselves up for failure. Like what I say, you can fix your life, you can change your life with trading, but you can't fix it. you got to fix your shit first, and then trading can, because again, it's so much psychology involved, so much energy, so much limiting beliefs, and so much of our brain and so much of our thoughts and our energy just goes to worrying about money or focusing on making money. So if a lot of our thoughts and our energy are going to worrying about money, worrying is such a low vibrational state, doubt, etc., we're then just creating the environment where we're just fighting an uphill battle. Like, it's possible, but it is just 10 times harder. And if you're listening to this thinking, okay, yeah, but I can do it, I'm different, that's what we all think, and it's just another excuse, and you will just be shooting yourself in the foot unless you have an income outside of trading. Speaking from so much pain and experience. So then, deviation from plan. Again, this links in with data. If we're taking trades outside of our setups, again, I know the difficulty with this because I went through it for years, and I know how difficult it was for me to stop taking trades outside of my setup. The way around it is you have to hold those to fruition, and literally within a few weeks that'll get beaten out of you, because we really just cannot be taking trades that are not in our setup. It's just a non-negotiable, no if, buts or maybes. We don't, again, a big one with this is we're looking at the market, our setup isn't there, but from experience we can see, okay, this is likely going down, let's say. And this gets more difficult the more experience you get, because then your intuition or your market direction improves. So you can likely actually call where the market is likely to go more. But if it's not your setup, when price then moves in that direction and you thought it was going to go there, it feels like you've been fucking punched in the stomach, and it's a horrible feeling. But really the way around this is you have to tell ourselves that, look, this is not my setup. Even though I can tell where price is likely to go, if it goes that way, it's still a win for me because I didn't enter. If I entered and I made money, I would have had a losing day today. Like, that is a loss, because in the long run, if we keep doing that based off of stuff outside of our setup, based off of intuition, we will not be consistent, it's not sustainable, and we will lose in the long run. So we cannot be taking trades that are outside of our plan. I do not care if it's win, even if you make money, it's a loss if it's outside of your plan. So try and drill that into your head. I know it's a difficult conversation, but yeah, like, a good practice is to sit on the chart and then observe a market that you think you can see, you know where it's going to go. Do not enter that trade and just let it play out and just think, okay, I am in control, I am a profitable trader because I can do this stuff. If I had entered this, I would not be acting as a profitable trader, and therefore my results would not show that. So really take pride in the fact that you're able to sit there and control yourself and not enter, even when you know where price is going to go. No, where price is going to go. That is where the strength comes from, and yeah, just own it. Like, know that, okay, yeah, I'm doing this, I'm actually in control enough to let price do its thing and me not just get stuck up in the weeds and get sucked in. So then again, this is a big one. So starting off with it's related to risk to reward. So we want to start off with one-to-ones, and again, we need to swallow the ego, swallow the pride, and just look ourselves in the mirror and say, look, have I consistently withdrawn one-to-one, like risking one to make one profit from the market? Have I actually consistently hit one-to-ones? If the answer is no, why are we actually trying to hit 1-to-3s, 1-to-4, 1-to-5s? Like, genuinely look ourselves in the mirror and think, is that anything other than arrogance? That to think that, okay, I've never done this before on the live account, and live is different to demo. I've never actually done this on a consistent basis. I've never done less than this. So why am I trying to do more than that and thinking that it's going to work? Again, for me, what worked, what got me to consistent was hitting 1-to-1s, 1 to 1.2, 1 to 1.3. And honestly, on average now, my average is 1 to 1.6 to 1.7. Before, I would have thought there's no point in taking a trade unless it's a 1 to 3. And then the trader that was saying that was not a profitable trader. The trader that is comfortable with taking a 1 to 1.3, 1 to 1.5 is the trader that's actually extracting money from the markets. So it's a huge, huge, huge switch. And again, you can always, and you should intend to improve and optimize, and then you can increase your risk to reward as time goes on. But unless you're hitting the 1 to 1s, don't try 1 to 2s. Unless you're hitting 1 to 2s, don't try 1 to 3s. So then, this is another huge one that fucking affected me massively, is having extra projects. So if you already have a job and then you're trading, that's already 2 projects. You then have your fitness and relationship, let's say just life. So you got job, life, trading. That's 3 projects. If you then have another thing, which is what I was super guilty of, then like you're building another business, you're trying drop shipping, you're trying anything. That's then project number 4. And then it's the whole thing of the I can't remember who said it, but you have your shower time thought. So when you're in the shower, what are you thinking of? You only have one thing to focus on. That you have your ideas. When you wake up in the morning, what are you focusing on? If we have trading and then other projects, our shower thoughts are getting, okay, maybe one day it's about trading, the next day it's about building that website. That means that the person who's just focusing on trading every day is just stacking on top of that, compounding the progress. And the person who's focused on more than one project is just edging up in both and then taking steps back. And yeah, it's just a recipe for disaster. Like, split focus is no focus. So if we can do our best to actually reduce the projects to job and trading. And then the last thing then, so reducing chaos in personal life. Again, this is a similar concept, but trading is so chaotic that if we have also a chaotic personal life, it's just, again, another recipe for disaster. All of these are just recipes for disaster unless we have them in place. So doing our best to actually limit the drinking, limit the going out. Again, trading is a very lonely job, so we do want to socialize, but socializing in stuff that fills up our cup, that doesn't leave us drained, leave us days catching up, etc. And again, then a lot of us want to trade to be able to travel and have the freedom. One of my main drivers, and even I've noticed that when I'm on the move a lot, moving from place to place, it affects my trading. So I actually trade better when I have a standard location, a base, etc. So that is it on all those points. We'll get into the actual trading process in the next one, but these are the must-haves, again, all outside of strategy, but the stuff that unless we fix these, there's no point in showing up every day. There really isn't. And I know a lot of them might have triggered us, and we think, okay, yeah, not me, etc. But really, we're all the same, and unless we have them in place, we're just going to keep going around in circles, lads. So I was rambling on, but yeah, that's everything there. I know it was a lot. We can actually break these down in more detail individually, but I'll leave it there.